to it doesn't come out properly. So welcome back to another episode of Market Buzz. Today's episode is gonna be a very good one, so make sure to stay until the end because we have the whole team ready to tell you what we are truly thinking about the markets. The US government is finally back online. Trump signed a bill last night and got the government going again. This should bring a ton of money back into the US economy and potentially see a bounce in the major assets that we are all holding right here. Interestingly enough, we're not getting CPI data today, which is kind of bad because we're not getting the clarity we need in order to make the best decisions possible. That being said, we're going to have to wait and see what happens. PPI data was supposed to come up tomorrow, and I don't think we're getting that either. It'll be interesting to see what the BLS says today now that they're back in business. But yeah, we have a lot of uncertainty. The market seems to be selling the news. A little bit of tech is selling off. We're going back to safety, but crypto seems to like the current environment. So we saw a little bounce today, and hopefully that continues. Bitcoin has been acting as sort of like an indicator for the market. So I'm hopeful that we potentially see a bounce today as the day progresses and we start to understand what we have ahead. The Fed, interestingly enough, we're seeing that they are currently in a very tricky position to make a decision for December. We were almost guaranteed a December cut, but right now it's almost a flip coin. So 50-50 chance of getting a cut or not for December, which is making the markets a little bit nervous just because of is what we've been waiting for, and we're just not seem to be clear on that. Again, the fear, uncertainty, and doubt continues as the as the U.S. government reopens. This episode of Market Buzz, we have Mimi, Timothy, Dimitris, and myself. So make sure to check out our portfolios down below. And if you have any questions, make sure to leave them in the chat. We will be more than happy to answer any questions you guys have. But I want to understand. So, Dimitris, I want to touch on you about the government shutdown. I'm definitely sure you're paying attention to this. What are your thoughts on it?
Hello, everyone. First of all, good to see you again after the summit. Good to get back to on schedule.
And the routine too.
And obviously, we all talk in private, like we text back and forth, and you know what I'm going to say. But it took longer than I thought. Okay, if you ask me how long it would take, it take like a couple of weeks. Didn't expect to be like 41 days, whatever the number is. Okay, so the initial celebration of the market that the government is back on business, and I wouldn't say it's a catalyst, but it's definitely better than continue the shutdown. Um, it was long, and we're gonna see how the economy got hit from it. All
What
the
were the
government spending.
damages?
Yes, for a couple of reasons. One is the government spending that did not happen during the shutdown. Number two is all the uncertainty that it created, and investors, most likely institutional investors, are looking and saying, you know what, maybe it shouldn't be risk on going forward. Um, as for the numbers that they say we're not going to get, all the numbers, or the missing numbers, the black boxes from those weeks, and what are they hiding? Uh, I don't know how that's significant. I mean, we're going to get the numbers this week and next week. So whatever it is, if it's bad, it's not going to get better like within a couple of weeks. So whatever it is going to come out. And to finish with the Fed, I think we're getting the Fed cut in December only because of the data we got last week or the week before. No, it was last week. It was the worst October job losses in 20 years. That doesn't go unnoticed. And the 25 basis points is not going to make the difference. We are like way above neutral. So if I was the Fed, I'm cutting right here and probably taking my moment for the next cut into 2026. But I think we're doing the cut in December, and the market finished the year strong. What happens next? We're going to discuss it in like later in the show.
Yeah. It's interesting too because there was, I think it was at 2 million government employees that were not getting paid during this time, and now they're going to be getting their paychecks, which is 30 days of salary, right? It's like what will happen with money, right? And one of the things which I would love to touch with Mimi and Timothy on this in the crypto markets to get an idea. But one of the things I was looking at is like the first things you sell is sort of like the riskiest assets you possibly hold, which in this case could have been altcoins. But what happens when all of a sudden this money starts flooding back into the economy? We know that the American economy, I think 40% of the people live paycheck to paycheck. So that's something to take into consideration as well. So that could have been just negative sentiment. Obviously, we were risk off, but also we saw sort of like needs for money, need for liquidity, and it was maybe the easiest way to find some liquidity. We could see that coming back November, like the end of November and December, which, funny enough, will make the Tom Lee's prediction correct. But what are your thoughts on this? How do you guys see the crypto market? I don't know who wants to take it first, Timothy or Mimi.
Mm. Okay, I'll go first.
Okay, Mimi, go.
Wait, Timothy, go first. Timothy, go first.
Okay, no, me and Toby from I see Toby in the chat, by the way.
Yeah.
Hi, Toby. We were joking all the time, like for the past couple of weeks, saying like, oh, just one more shakeout and it's over, and then next week happens with just one last shakeout and then it's gonna happen. So eventually you have to be like giving yourself a line in the sand where you wanna say, okay, this is the line where it needs to end. And I think for me currently we're not yet at that level, so I'm still in the camp of we could see another bullish leg higher. I'm still thinking the market still has some room to go beyond. I still think the cycle hasn't topped yet, just because we haven't seen the euphoria phase, and just because we're seeing in the economic data, as far as we can see, that things are going well. The only thing I need to tell the viewers, I'm not the guy who's gonna tell you bull only content. So when things get bearish, so when I see Bitcoin, for example, close below 98, that would be a level for me to say, okay, here something might be changing and I might de-risk a bit. I will always have a little allocation into crypto, but just de-risk a bit, because you don't want to be the guy holding the bag just going down 50-60%. So that's where I currently put my line. If Bitcoin can manage to stay above that level, then things can continue higher, in my opinion.
In terms of the 98K close, would that be like a daily close, a weekly close? What are you thinking, Timothy?
I'm more a weekly close, especially if we're talking ending of the bull market, ending of the 4-year cycle. You're not gonna decide on a daily close, but I already did some risk management by closing most of my altcoin positions and putting this in Bitcoin, just because I didn't want to have the risk whether if Bitcoin drops now, it's gonna be mainly Bitcoin. Mainly Bitcoin dropping, but altcoins dropping even more. So that's why I converted most of my portfolio into Bitcoin. And if it goes up, we still have some upside for crypto, because Bitcoin is mostly the first mover. I can always jump in later with some altcoin plays. But definitely watching the weekly and even the monthly chart.
Yeah. It's really funny because with the whole one last shakeout, it's always like, well, maybe Mimi shouldn't get on a plane kind of thing, because every time I get on a plane, there's so much volatility and the market's crashing literally every time, even a 1-hour plane ride. Anyway, I am on pretty much the same page as Timothy, and I speak to Toby as well. Shout out to Toby, and thank you to Toby as well, because I have been a little bit preoccupied and very busy, just like on the road. And so Timothy and Toby I've been speaking to and giving me a lot of information on what's happening. But I was saying before as well in a conversation with Nesta that in terms of sentiment, another layer of uncertainty I really, really felt, aside from like the government shutdown and the lack of data. I just wasn't in front of my computer that much, my laptop that much, and couldn't see like liquidity levels, or how the TAs were, how the indicators were all forming. It's just that it put me on edge, and it just goes to show that when there is no clarity, when you can't see what's actually happening, it does put you on edge. But once I got back in front of my laptop and I took a moment to look at everything, I'm again, I want to repeat, like, I highly recommend, not financial advice, to just not focus on short-term price action, because that is going to really stress everybody out. This is definitely not the time to be focusing on that. It's such a choppy range, especially for Bitcoin, that it's going from between 99 and 106,000. So I'm taking a huge step back and looking at the bigger picture. And that gets me so excited about what's going to happen. There's so much progress. I mean, XRP just got their first spot ETF, Canary Capital, was approved yesterday, was it? And then you have not random, but a few altcoins projects that are rallying like crazy. So you've got Telcoin, which is the very first digital asset bank ever. Its ticker is TEL, and they were approved. They were completely fully regulated, I think, beginning just a few days ago. And that's why they rallied about 130% in a few days. I think in 2 days, possibly. There's so much happening. More ETFs coming. The majors are what I'm focusing on the moment. But in terms of where crypto is heading, I think that it still will get a bit scary, and I wouldn't rule out Bitcoin revisiting, because there's so much liquidity around the early 90,000s, 92,000 to 95,000. There's so much liquidity there for market makers to take out, which we have seen it happen time and time again the past few months, just taking out longs and shorts, bears and bulls. The moves are just, in a way, very predatory in a sense, and I'm not really actively trading. I'm making a few trades, but I see a very bullish end to the year for crypto. I don't want to say one more shakeout. I just want to say step away from short-term price action and think about what's to come, because there's so much exciting stuff coming for AI, tech, blockchain technology.
Yeah, the volatility short term has been just crazy. I think last week we ended in negative, but then this week we bounced off just on the idea that the government shutdown could end. Then we sort of saw buy the rumor, sell the news. What we're seeing today, I'll share my screen just to kind of show you guys the price movement we have seen, right? But it's been like super volatile. Like, just one piece of news can shake the market, and that's because of the fact that we just don't have any data to look at. So the market hangs on to any piece of data it can, and then it overreacts. So the volatility is expected, right? Like, and put on top of that the Trump factor, right? It does not surprise me that we're just seeing crazy moves. But today, mostly risk off sentiment going into defensives. We see Walmart, the Walmart sort of like flat, energy a little bit up, right? The sort of the laggers, right? And whoever has the news, I think Cisco had really good news on the AI build out. So this was really good. Yeah, we're also 2 subscribers away from 500. So don't forget to hit that subscribe button if you'd like. But yeah, like if we go to the week, we're actually pretty green based from last week. So it's like we are seeing strength. Obviously, like the defensive sort of healthcare, which has been lagging, which one of the theories I've been hearing around is the fact that we are currently sort of like in catch-up territories where many hedge funds have not been able to beat the benchmark. I think in the last 2 years is 80% returns, right? So it's like many of the hedge funds have not been able to beat that. So now we're starting to see sort of the laggers pick up. For maybe those hedge funds are starting to place positions, maybe take away some from the winners, right? And then go into the sort of those companies that have been lagging extensively, right? The Eli Lilly's, even Novo Nordisk should be good, right? But it's like UNH, right? Dimitri's smiling right there, So all of these different companies, right? So we're just seeing sort of like the broadening of the rally, right? Like it was only the AI and chip companies that was like benefiting from this, and all of a sudden we're seeing that transition to the rest of the market. Again, crypto, if we go to the weekly, we see that, hey, yeah, we're seeing some sort of like mixed results, but I mean the big ones are benefiting. And XRP's up this week almost 9%, which is like the outlier here, and I'm assuming is because of the new ETF, right? So this is just euphoria that's just telling you that there will be more money coming into these assets, and we'll continue to see sort of the like the rally continue in some places, right? Gold is up, silver's up, platinum, palladium, sort of the commodities. The commodities are starting to rally. It's been an interesting, also like the 10-year. I believe the 10-year yield is down a bit too. So we are getting more clarity, and we are sort of starting to get into a place where we can actually start making educated guesses of what's happening in the economy, and hopefully that continues, and hopefully Trump doesn't derail the rally. That I don't know. Like I'm kind of bullish, right? Like I do believe that this that like the from here till the end of the year, we're potentially seeing like strength in the S&P and in technology as well. It's just a matter of Nvidia having earnings next week. By the way, don't forget to hit that like and subscribe, because I'm probably going to be streaming live the. I don't want to put you guys on the spot, but I'm probably going to be streaming the Nvidia earnings, right? Because
Yeah, why not?
All right. So let me ask you guys a question. We all agree that Q4 is going to be it's going to be strong, right? And just in case the viewers can't see, Timothy just posted on the chat, when S&P 500 hits new highs in both September and October, Q4 was positive 100% of the times, averaging 5.5%. So we all agree. However, we have to position ourselves for next year. So what's your take on 2026? Because we all agree Q4 is going to be strong, like in crypto and equities. So what's you guys thinking on next year? Let's see, 3 months, 6 months ahead. What's your feeling on that?
Timothy,
I'm asking difficult questions, but I'm just kidding.
Yeah, it's a good question, because that's actually a question, because you might think the market can go south, meaning we might hit a bear market, I assume. But time and time again, the history proves that it's impossible to predict whether there's going to be a bear market or a correction. It's very difficult to time such cases. And also, time and time again, it's proven that for stocks, let me be clear, for good fundamental stocks, it's always better if you're an investor to basically buy and hold. So my strategy, how I outperform the market with my stock portfolio, is by simply investing in high quality stocks that have a wide moat with great earnings, and just buy and hold. So I never really change my position unless the fundamentals change. And I am still holding the Google that I bought during the pandemic. I am still holding Microsoft that I'm been holding since the 2022 dump. I'm still holding other stocks that I'm not touching, just because I know they are still going to grow in earnings and still outperform most of the companies. But yeah, that's my strategy. So my strategy is to simply do nothing, and doing nothing is also a strategy, and is usually even harder to do, because doing nothing, if you look at the stats, being dead outperforms the traders and the hedge funds over the long term. So that's why doing nothing, in my opinion, is the best strategy.
Mm-hmm. Okay. That's a very interesting question for me, because I'm so crypto heavy, and for those so heavy in altcoins, have not seen a bull cycle. It's just been purely Bitcoin and a bit of Ethereum. So the rotation hasn't really happened. For me, how am I going to position myself? I had somebody ask me today a few times, what am I going to do with some of the altcoins that will not hit all-time high or the previous all-time high? I will be cutting losses. I need to constantly look at fundamentals, progress, where's the project going? So I definitely will. but most of them I will actually keep for the for most of the cycle anyway. How to position for next year? For me, I am going to be doing nothing and something. So with stocks, long-term hold have always been mostly AI, tech, that sector. With crypto, I will be holding mostly Bitcoin, Ethereum, possibly XRP. I will be taking a lot of profit in terms of altcoins and then cutting losses if I need to. But I will be trading, I would say probably maybe 30% of the time when it comes to altcoins. For me, I'm really excited about what's going to come with blockchain technology, and there's going to be so many new developments that I want to keep on top of every new thing that comes along. So I will be pretty much a hybrid of a long-term holder and also a swing trader. That's what I'll be doing consistently. Does that answer your question? I don't think it does.
Yeah, it does. I mean, like, yeah, you're gonna go potentially into like a little bit more trading in the alts that you're not sort of like fully confident in, and then kind of trimming a little bit of positions that maybe you have not sort of seen the results that you're expecting, and then continue to play the sort of the same playbook. At least that's what I think. I don't know if I got anything wrong.
No,
Yeah,
you're
makes
right.
sense.
Yeah. The other thing is that in terms of sentiment, when everybody thinks it's going to be a bear market, it never really is. Like I for now I do think yes, it makes sense for a bear market to arrive next year at some point. But when is it going to be? It potentially could be later than people actually think. Then there's the whole Tom Lee talking about super cycle, and he gets everybody so excited. You're feeling a little bit depressed. Just watch him.
Just listen
But
to Tom. Yeah, it's like he gets it right too, which is nuts.
He's nuts. Yes.
Yeah.
Yes.
Yo, yeah. Dimitris, what are your thoughts? What are you doing?
Okay, so the reason I'm asking you guys is I take a look at my portfolio and I see a lot of tech, and the tech is because most of the tech I had in the portfolio, the positions grew, the AMDs and the NVIDIA and the Google. So I have enough tech already, and I'm ahead of the benchmark. So I don't need to take too many chances more. So the way I'm looking at this thing is enough buying tech. Like I'm done buying tech for the year. Okay, I bought Amazon when we made the call, but I'm done buying tech. I have enough of everything that I already like, and because I add to my portfolio every couple of percentages a month, it's only going to be defense, and not defense the ones that just stays the same and pays me the dividend, but the profitable good companies that have an upside as well. The Berkshire Hathaways, the UNH. Okay, UNH is like debatable how much upside they can have because they didn't have in the last 2 years. But looking forward, I'm remaining bullish. You know, some Walmart, funny as it sounds. So, and you're probably wondering why am I thinking like this? Because I'm usually the most bullish of you guys. I'm
Which is
never
great.
like bearish.
Yeah.
Bearish now. What are we looking at? Walmart. And I'm not bearish now. But hear me out and tell me if I'm crazy. We're probably going to end up having another 20% year, right? For the S&P. So it's going to be the third straight year of 20+%. That only happened 3 times in history. Before 1929, before the dot-com bubble, and now if it happens. If it's tech into a bubble, depending who you ask. If you ask us, no, not really. But if you ask the guy that like banks and like industrials, because you're going to say, yeah, we're in a bubble. But those people are the people with the money, are the institutional investors, that they care more about not losing than winning. Okay? So, if you look back in the dot-com bubble, you saw that the Cisco was P 200 times or whatever. Do we have to get to NVIDIA 200 times to be a bubble?
It's already been at 200. It's already been at 200, and it grew into the earnings. it grew. So it's like it's come down.
Yes, but it grows, and then you have the earnings, and then
Back down.
it goes back down. And no, and I'm talking about the trailing. Oh, sorry, not the trailing. The forward, it's always under 50 or whatever the number is. It's never like in the crazy. Tesla is 200, 250. So are we have gonna wait for valuations to get as crazy as they did in dot-com bubble, so we can call it officially a bubble? Is that what
But
we're
the
doing?
thing, like how many,
That,
like I wonder, I wish I was an investor during 2000, during the 2000s, like during the internet
yes.
bubble, to see if this many people were calling the bubble, right? Because it's like it feels that every single person right now is like, oh, we're in a bubble, we're in a bubble. But it's like, yo, like the bubble pops when it's too much, right? It's okay to be in the bubble, but we have to wait. That's where I'm like, because I don't think we're in a bubble. Like I'm not. I don't like. We are
I
starting
don't
the
think so.
bubble.
I don't think so either. Like some parts of the market are valued like precisely like they should
Yeah.
be, and some parts of the market are a bit expensive. Some Palantirs, like the Teslas, but they are not that many, and they have earnings, and they beat their earnings. That's the difference with the dot-com bubble. They have
Yeah.
earnings, they're making money with like no revenue and like 500 times. Uh, but
Yeah.
that's my reasoning of not risking any more money on tech. So in the next couple of months, I'm just gonna risk my capital into what it's safer. I'm not saying
Yeah.
I'm bearish getting out of tech. That's
Like
that's my
like
thing. I'm trying to say.
yeah. Like I agree. The thing is like I agree with you on the fact that because we've grown so much on the tech side and it's become such a predominant part of the portfolio, it doesn't really make sense to sort of like increase that risk and then go in even more and then say, oh, I'm just going to sell my whole portfolio just to go on tech. But that rebalancing, I mean, like I'm okay with, you know what I mean? But for example, like there's just opportunities in the market that just like the sentiment and the narrative is so negative. So for example, like we are starting to go into debt, right? And it's scary, right? Like it's like, okay, like we're going into debt, like this is potentially something that won't be able to be paid off, right? For example, Meta is one of the advertising giants that's probably like in terms of this, like it has the smallest moat around them, right? So they're starting to go into debt in order to build the data centers. But if you look at the deals, it's a lease. It's a 30 to 40 year lease on the data center stuff that pretty much allows them to sort of maybe back out, maybe potentially do so many other things. We don't really know the details of that deal, but it's like these companies are not like, it's like this. If you tell me it's pets.com, like I'm not saying you are, right? But it's like if you tell me it's pets.com, it's freaking not. Meta makes billions of dollars of revenue and they're deciding to spend this capital in other things. The interview with Microsoft, right? The interview with Microsoft, they've already invested in OpenAI, and you can see it in the CEO's face, right? He's just like, we don't care if OpenAI goes bust. Sort of like it's because we have deals, like we signed contracts. It's like we are protected by this. It's like worst case scenario, I can grab their model and sell it out to people. So it's like they already have sort of this mo, and it's like, and they're like, look, the investment in compute, yeah, AI is part of it because it's cool technology and it's definitely going to be innovating many parts of our business and other people's business. But the reality is they need to compute, right? Like we are going into like the algorithms, how YouTube runs, how like the amount of data, the amount of compute that we're creating is going. So for me, like that's the thing. It's like the narrative, like we've been looking sort of for a narrative of like, okay, let's collapse it, right? And obviously, like one of the things that scares me by the end of the year is one of the things Dimitri and I talked about, which is the taxes, right? A lot of people in America are going to be selling to try not to pay taxes, rebalance portfolios, and all that stuff. But we're sort of seeing that shift right now. So for me, it's like, look, like I'm not increasing, but I'm looking for opportunities. So for example, selling some of my Nvidia and entering into Meta seems interesting. It's like I like the Meta trade. So for example, like what's on my desk right now, interestingly enough, is just like I'm buying some Meta. Like I bought some Meta for the Etoro portfolio and my personal portfolios, and I'm actually increasing my position because I think the phone killer is the glasses, and Meta is ahead of the game. So there's still opportunities. It's just a little bit sort of like for me, it's like it's going to be a little bit trickier to kind of find them and execute on them, and it might take a little while for them to pay off. But I like the narrative, the story, and the balance sheet of these companies too. Right. So That's where I'm at. I don't know. Like so I'm like, look, like I'm okay with trimming, and if anything becomes too big, I'm definitely out. And the AI story will continue. Companies like Palantir, companies like Oracle, companies like that are extremely overvalued, they're gonna have to come down at some point. But if they become attractive again, I'm more than happy to enter. You know, it's like there will be opportunities coming. So at least that's my take for next year. I just like I'm waiting for the
So
opportunities to get
you
executed.
wouldn't buy,
Right?
so you wouldn't buy Palantir or Nvidia right here. That's my final question.
The thing is, Nvidia is not crazy. The valuation of Nvidia right now, depending on how earnings goes, which I think they're gonna blow it out of the water, because expectations are like people are just like trying to find anything to kind of like put down Nvidia. But the current valuation is fantastic for Nvidia, right? So it's like I would buy Nvidia. I wouldn't buy Palantir because it's like there's so much uncertainty in that stock, and the volatility is going to be there. So if you're willing to ride that horse, I mean, like with like 0.5% of my portfolio, maybe, but I'm just not interested because like I see better opportunities in other places. Will I not make the X amount of percent that we've seen? Maybe, and I'm okay with that. You know what I mean? Like I don't need to hit 1,000x every time. Like I'm okay. I'm okay with my Nvidia's 4 or 5x, right? Like so that's where I'm at, right? Like it's like obviously there's just changes as time goes by, you know what I mean? But it's like everybody's like so like it almost feels like we're just in a bearish mentality in a sense. It's like and like I don't think it's like I'm not in the camp that it's like look like maybe we see a slowdown. Like we can see in the G7 economies, most of the G7 economies other than the states are slowing down significantly. Like GDP data for the UK came in lower than expected. Europe, inflation is coming in a little bit weird. Unemployment is coming higher than expected. They're not cutting interest rates because they're kind of scared. So it's like, what are we seeing there, right? It's like, I don't know. I just like, I'm not in the camp that we're in collapse, which I think we all agree, right? Like we are all sort of like cautiously bullish in a sense. It's I don't know if that cautiously bullish. Look, it's like I'm okay with just like normal returns, try to beat the S&P. I'm happy with that, right? So that's where I'm at. Let me have a look if Timothy, how are you doing with time? Because I know that you're the busy one.
I'm gonna talk about one thing.
Okay.
And then maybe I'm gone.
Gold.
Gold and silver.
I freaking hate gold. I hate gold.
Is it a dead cat bounce or is it the next leg higher? That's the question. Because it can easily just dump some price here and then continue to fizzle out. I was watching for that 3.5k level to get hit. Actually didn't even get barely below 4k. So that's the reason why I didn't sold my gold, silver, and palladium, just because it's hard to predict right now. There is a lot of bullish sentiment across the precious metals, so I'm just gonna ride the wave and just keep on holding, because what I find very annoying is that stocks are going up, gold is going up, but crypto is lagging. So that's why I decided to diversify a little bit into more precious metals, just in case Bitcoin has stopped and gold continues to rip higher. It's getting all the attention. You want to be in a bull market somewhere, and right now I think you have stocks, you have commodities. It's okay to have a laggard Bitcoin in the portfolio. So that's what I'm seeing in gold right now. Also the silver chart, if we can go to silver, it's pretty insane. It's almost making new highs. Like, yes, barely making new highs, but yeah, double top here or break higher. Hard to say, but I'm just happy I didn't sold my position. And I've mentioned it before. Commodities, they have an 8-year cycle. That means we're now in year 3. That means 5 more years of up only. So that's why I'm still riding the horse and continuing to hold. And yeah, we'll see how it goes.
Yeah, I mean, like I'm not like a huge fan of gold either, but I do have a trade that I shared with you guys, um, which I only do with like play money on the outside on Bybit, which is XAU against USDT, and it's a 50x leverage trade, and I bought it at 4,000 when it was at 4,000, so it's at like what 4,300 now. It's doing really well, but yeah, that's my only part in like gold, which I'll close soon. But I do agree. I think it's still going to run. It's going to run. Yeah.
Nice. Yo, anything else you guys want to talk about? Let's see like if there's any more questions around here.
Did
Because
we
I'm
do
gonna
the what's on our desk?
Our desk.
sort of. Sort of. Okay, go quickly. Go quickly.
Yeah.
Dimitri.
Me?
Or Timothy.
No,
sure.
no, Demetrius.
Demetrius, go. Quick and easy.
So
What's on your, what are you paying attention?
I'm paying attention to BRKB. Warren Buffett called it a career the other day, and the new guy is going to take the role starting next year. So I'm looking forward to see how he's going to do all the press and all that, because he's going to have his handful for sure.
Yeah.
In the
He
first
has a
couple of years. Yeah, I don't know who the guy is, but
big shoes
he's
to
taking
fill.
over. Yes. God is giving you his keys, and you take over. Let's see how the guy does. But I'm remaining bullish on the stock only because he's sitting on 380 billion. I mean, Buffett said once, you have to invest on companies that even an idiot can run. I mean, with 380 billion, anybody can make it work. Like really, right? So I'm remaining bullish on that. I'm remaining bullish on BJ's. That's my version of Casco. And one more, and Walmart. 3 stocks.
Timothy.
Yeah, I'm bullish, or at least I'm looking at a new narrative. So I don't know if you followed us for the couple of weeks, but Mimi, she told us about the privacy narrative. I'm in the opinion that the privacy narrative is going to die out. Maybe not this week, maybe not next week, but eventually in crypto, narrative moves. And I think the new narrative is going to be neo banking, which is actually banking on chain. So you recently saw maybe the news about JP Morgan having their own coin on chain, their own backed stable coin. This is not new. You already have a few projects doing banking on chain, and I think not that it could be the next financial system, but I think this could be a narrative coming soon in the crypto space, because there is getting more attention into stable coins and on-chain banking. So I'm just watching a few smaller altcoins, and yes, it is on Ethereum. So this is the main play also if you're looking long term. JP Morgan, their coin was launched on Base, which is a layer 2 of Ethereum.
Mimi.
Not financial advice, but I would add Timothy Telcoin to that list as well. They have their own stablecoin, which is EUSD, and again, they're the first digital asset bank, first crypto bank, pretty much. So that's one I'm watching, and there's a lot of potential there. Again, not financial advice because it's quite risky, high risk, high reward, and BitTensor. So shout out to Toby for sharing a documentary recently. But I invested in BitTensor, which is the ticker is Tau, TAO, and it's basically decentralizing AI, and I think it's going to be a huge player, a huge part in the AI revolution and crypto. So those are the two right now, aside from Ethereum, Cardano, Ripple, my loves. So
No. For
Yeah.
me,
One last question for Mimi and Timothy. One last question.
Sorry,
Let's
Lester.
Getting
Let's
tested.
assume,
It's okay. It's okay. I don't want to talk. I don't want to talk no more. I don't want to talk no more.
let's assume that we get the data from the government, and it's like a shit show. It's like a 5% unemployment. Everything goes to shit.
Yeah,
The market drops into a bear market. Equities.
yeah.
What happens with crypto? We're not like it's gonna be a 4-year cycle and not get what we are all expecting. Is that a possibility?
I mean, crypto, I believe, would fall with bad economic data, and if the stock market falls, it'll fall with it. So, yes, if everything else falls, it would as well. But again, it could even test Bitcoin again. Like it could test the resilience of Bitcoin as how Bitcoin reacted in April.
Yeah.
Okay.
Yeah.
Anything else you guys want to say?
We want to hear yours.
Mine is simple. Like I talked about it already. That's why I'm not bothered because it's like I bought Meta. Like I just bought Meta. Both like
Yes.
I've increased my position substantially. I think it's punished without sort of reason there. And then the other one is Mara. It's like taking a massive hit because of Bitcoin pricing. So I think there's an opportunity there, right? But again, only time will tell. I need to go because the workers in my house renovations are like they need to go like work and like take walls down. So thanks so much for watching, everybody. Don't forget to put your questions in the comments. I'll make sure to answer them and make sure to everybody answer them. Make sure to check out the description below. Hit the like and subscribe. We're 2 people away from hitting 500. It'll be fantastic and a great milestone to hit. Don't forget to check out Timothy's course. It's in the description, free of charge for all Market Buzz members. And thanks so much for watching. Check out our portfolios and peace everybody out. See you next Thursday, or maybe
Bye-bye.
if market
Thank
crashes,
you.
we'll do an emergency one. So pay attention. Stay close. All right. Thanks so much for watching. Peace.
Bye.